Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning February 29th. Well, Brexit and the pound dominated last week, but this week the focus will be on the US and the dollar, as the first week of the month brings the US employment data. Non-farm payrolls are expected to rise, the unemployment rate is expected to remain below 5%, and average weekly earnings are expected to accelerate. It should be supportive for the dollar. The other big indicator of the week will be the PMIs for February, the final market PMIs for those countries that earlier released their preliminary ones, such as Germany, the Eurozone, and the US, and all the others. Looking at the forecast, only the US PMIs are expected to improve. All the others are forecast to be either unchanged or lower, including the UK. The news could be negative for the euro. China's manufacturing PMIs are expected to be unchanged at below 50 levels, which still shows weakness. The Australian dollar and the other commodity currencies could suffer as a result. The focus for the euro is likely to be on the Eurozone CPI for February, which is due out today. That's important for the ECB's deliberations when they meet next week. It's expected to show slowing inflation, which could be negative for the euro, although it's probably in the market already after Friday's slowdown in German inflation during the month. The last week of the month, as usual, brings us a slew of Japanese indicators. Recent data from Japan has been disappointing, especially last week's core CPI figure for January, which showed a deceleration in the already low inflation rate. The industrial production data for January is already out this morning. The employment data due out Tuesday morning, Japan Times, expected to show the unemployment rate steady at levels that any European country would envy, but household spending is forecast to continue falling nonetheless. Japan's data may get increased scrutiny ahead of the next Bank of Japan meeting on March 15th, as some commentators are already talking about the possibility of the Bank of Japan taking further action at that meeting. In addition to the PMIs, the UK announces mortgage approvals today and several house price indicators on Thursday. Mortgage approvals are expected to rise and house prices are expected to rise at a faster pace. That good news could provide the trigger for some profit-taking on short sterling positions, but I'd expect any rebound in the currency to be met with renewed selling interest. The only G10 central bank meeting this week is the Reserve Bank of Australia, which is unanimously expected to remain on hold. However, given that economic conditions have worsened notably since their last meeting a month ago, they could take a more dovish stance, which would be likely to weaken the Australian dollar and probably the New Zealand dollar too. Finally, the U.S. political scene heats up on Super Tuesday when 12 states vote for candidates for president. The voting could decide who the candidates from both sides will be. So far, the FX market hasn't been paying much attention to the contest, but it could if it appears to be coming down to Trump versus Sanders. There are no public holidays in the major countries this week. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.